Hello, options traders. So I want to walk you through a question that I often get from traders, and that is, what is the best S&P 500 trading vehicle for you and your specific account? As you may or may not know, if you're an options trader, you have a lot of choices in this area. You have the SPX, which is what most professional hedge funds and professional traders will trade, but it takes a pretty large account in many cases. You have the XSP, which is a newer product that is designed in many ways to mirror the SPX, but to be smaller. Then you have the ES futures, an options on the futures that you could trade. And then, of course, you have the SPY, the ETF, that has options available to it as well. So I'm going to use OptionStrat, and I'm going to use it as a proxy for walking you through the different types of trades that an S&P 500 options trader could consider. And I'm not going to make any final judgment on what's right because it's going to be different for everybody. But what I want to share is, what are the differences? Why would somebody choose one over the other? So this first one, and you'll see if you're familiar with OptionStrat at all, you'll see the symbol for each of these is going to be in the upper left-hand corner. And in each case, I've done what would be the equivalent of a 50-point wide butterfly. Now, SPY is 1/10 the size. So in SPY, it's going to be a 5-point wide butterfly, or a 5-point winged butterfly is how this is described. But everything else about these are going to be the same. And what I want you to look at specifically is what's called essentially the notional value. This is a single butterfly that's 50 points wide, and this is going to show, as of today here on April 2nd, 2024, with our current volatility environment, this is going to show what each one of these trades would look like. The expiration is the same on all. They're all at 45 days. And again, all of these were modeled here just going into the close on April 2nd, and they all have about the same volatility as well. So the thing that you'll notice in SPX, we're looking at a potential max loss on this trade of $480 and a credit we're going to take in of $4,520, which is also the max profit that would be attainable in this trade. So that's with SPX. SPX is going to be the largest one we're going to look at. So the other ones we're going to look at are going to be somehow fractional variations of this particular one. I should say that I predominantly trade the SPX. That's my main go-to vehicle, but it's not right for everybody. So the next one is the XSP. This is the SPX's baby brother, if you will. And you can see that if you're trading the XSP doing this same trade, but of course it's 1/10 the size, so these are 5-point wings instead of 50-point wings, we have a max loss of 47 and a max gain of 453. So again, we can look at those two. So 4,500 and 480. And we're essentially the same, so 10% of what it would be if you were trading SPX. Now, the next one we'll look at is the ES futures contracts. Again, here, 50-point wide, because this is the same essentially as the SPX as far as the size, or the market, I guess I should say, where the market trades. But it's set up so that it's what we call the notional value is half of the SPX. So you're going to see that these numbers are essentially going to be half of what they were for SPX. I put on this exact same trade. I've got a max loss or a max risk of 250, where it was 480 here. And again, I also took these snapshots a couple minutes apart. It's essentially half. Likewise with the potential profitability as well. So again, SPX, XSP, and then the ES futures. Then there's one final one that people might consider to trade, and that is the SPY. So the SPY, again, we're looking at 1/10, so we're doing a 5-point wings here. I can see that I didn't have this centered right at 520. But either way, it's 5-point wings. It's close to the money. So it's essentially going to be the same trade. And again, we would expect that to be 10% of what SPX was, and it is essentially 10% of SPX. You can see that a trader can have all these different products that they could potentially trade, and that they can size based on your account size. You may choose one of these over the other, but there's a lot of other differences too. So now that we see what it looks like if we model each one of these trades, let's go take a look at what the other differences are, because there's a lot of other reasons that a person may potentially choose one over the other. One of them is going to be the liquidity. So this is approximations. These are, of course, going to vary on any given day, but these are approximations on what at the money strikes, how many there might be trading at any given time. SPX is pretty darn liquid. And then, of course, XSP. XSP is a newer product. It hasn't really caught on quite the way people thought that it might. Not sure why that is, but it's just not as liquid. And anything that's not as liquid, one of the big challenges is the bid-ask spreads in it can be much wider. In an experiment I went in a number of months ago, I went in and I did some trades in SPX. I did the exact same trades in XSP, and I modeled those two or followed those two through a series of adjustments. And the bid-ask spread was so wide in XSP that while my SPX trade ended up coming out with a decent profit, I ended up having to shut down the XSP trade because every time I made an adjustment, I gave up too much money on the spread. So it just wasn't feasible for me to continue trading that particular product. And then we have ES, the ES futures. Of course, they're highly liquid. And of course, SPY is highly liquid. So in general terms, I would say these three are pretty darn liquid. This one at this point is not. That does not mean that won't change over time, but right now it just hasn't caught on. Now I want to look at some other key differences. So the next few slides, we're going to look at SPX options, XSP, ES, and SPY. What we're looking at here is that the S&P 500 index, it's the largest size options contracts that you can trade. And these are European style. They only get exercised at expiration. The XSP is 1/10 of the size as SPX, as we've already seen. Again, European style only get exercised at expiration. Then we have ES options. They're half the size of SPX. These are American style. They can get assigned to you at any time. So you have to be aware of that and be prepared and okay with taking assignment. SPY is 1/10 of SPX. You also can be assigned at any time. So these two actually, that not only are they European style, so they go all the way to expiration, but I would also note that these two are cash settled. There is no assignment of any type. You either had a certain amount of gain in the trade or a certain amount of loss, and it settles at expiration. If you haven't closed the trade prior to that, I very seldom carry a trade all the way to expiration personally. As we further look at this, and I just mentioned this, we talk about settlement. So these two are cash settled. This is delivered to you in futures contracts. This is settled out in ETF shares of SPY. So in the futures contract, if you have not traded futures before, one of the nuances of futures trading is there are 4 expirations of the ES futures contracts per year, and then each one of those quarterly expirations of the futures contract has a whole host of options expirations under it. So it can get a little bit confusing when you're not only looking at the fact that futures contracts expire quarterly, but then when you're trading options on one of those quarterly futures contracts, there's a whole bunch of different expirations that can be rolled up into each one of those quarterly contracts. So you should not get into this world unless you've traded futures before and you have a good, complete understanding of how those futures contracts are going to trade. Then we look at contract size. Again, covered this a little bit, but SPX is the big one. And then these are 10% of the SPX, XSP is. Futures are $50 based on they're half the size of SPX. And this is a typo. This should be $10 as well. So I do need to change that, but note that this is $10 here also. Then we get to the tax treatment. Now, this is, first of all, I'm not giving tax advice here. Anything I'm going to say, you need to talk to your own tax professional. And I believe this is only for the U.S. So if you are a trader that trades outside of the U.S., this could have no bearing at all on you. I really don't know. But if you were to contact a tax advisor, the question that you'll want to ask them is this Section 1256. So basically, if you have gains in SPX options or XSP options, and you qualify for this 1256, I should say ES options as well, a portion of your gains can be considered long-term capital gains, which are taxed at a lower rate here in the U.S. as opposed to short-term gains. And 60% is going to be long-term gains, 40% is going to be short-term gains. So this is a favorable tax treatment, but again, confirm with your own tax professional how it might be impacted in your account and the type of account you're trading in, because if you're trading in an IRA or something, this may have no bearing whatsoever. And then in SPY, all of your gains are considered short-term capital gains, assuming, of course, that your trade lasted less than 1 year. So let's look at trading hours. How many hours a day can I trade these different products? The SPX, its normal trading day is about 6.5 hours. The XSP, 6.5 hours. The ES options pretty much trade round the clock. The market closes for about an hour's worth of time, a little under an hour's worth of time to do what's called settling each day. But short of that, the market is pretty much open round the clock with the exception of Sundays. So it is closed on Sundays up until, I believe it's 3 o'clock my time, Pacific time. So that's going to be 6 o'clock Eastern time, 6 p.m. is when the futures markets will open back up for the next week. The SPY options have some extended trading hours, but I would note that liquidity will drop off on these in the after hours markets. But one of the benefits of the ES options is if there is a big event that occurs after hours, you do, if you know what you're doing in trading futures and you're permissioned for futures trading, because many brokers require a specific and separate category of trading for futures options, you would have the ability of putting on a nighttime trade if there was some major event that happened at night. Election results that get announced at 11 p.m. or midnight that might impact the market. Might be a time when someone would come in and look to do an ES trade because it is open round the clock. And then finally, I want to talk about the expiration, how often the options expire. So the SPX options, they are daily, weekly, monthly, and then they also have something called AM expirations on the monthlies. Those are a little weird. So if you trade SPX options, I'd urge you to dig a little deeper into what is an AM expiration. Again, the AM expirations happen monthly. I'm not going to go into all the details, but basically where a normal Friday expiration that you might have in any of these other options, they expire at the end of the day on Friday. An AM expiration, actually you can't trade it after the market close on Thursday. And then Friday morning, wherever the market opens on Friday morning, there is no trading of those options on Friday morning. But wherever that market opens, your AM expirations are going to get marked to the market at that next day open, and that will be the value of your position. So a little bit weird, and They're the only ones that have an AM expiration. The XSP options pretty much offer daily, weekly, monthly, pretty much all these daily, weekly, monthly options. So very liquid, lots of trading opportunities on those. So hopefully you found this useful. It's just a little bit of a summary of the different styles of options that someone might consider trading if they're looking to trade the S&P 500. And one of the reasons, too, that so many traders trade the S&P 500 and these different products is they do tend to be overall highly liquid. The S&P overall doesn't have major things such as an earnings announcement or something like that. Certainly there are big company earnings that can move the S&P 500, but in general, it's not going to go up 10, 15, 20%, 50% like some companies might do in a favorable earnings, or drop by that amount in poor earnings. So it tends to be a little bit less volatile sometimes than individual stocks. Is probably one of its main benefits. Another main benefit I find is that the technical analysis that you can do, the chart studying on the overall S&P 500, I find to be a little more stable and a little easier to follow than individual stocks. If I draw trend lines, channels, things like that, they tend to adhere to those a little bit more than an individual stock would. So those are some of the benefits I think that a lot of people see in trading different vehicles around the S&P 500. So that's it. Hope you find this useful. Take care, everyone.